Hey, my name's James Nicholson and welcome to my YouTube channel. It's bad news today. The inflation data didn't come out as good as expected earlier this week, and that's now leading mortgage lenders to put their rates up. This is not great news. This is not what we wanted to happen, but this is what happens when you get bad news in the market. It reacts quite quickly to that news, and they put rates up way quicker and faster than they go down, similar to petrol. I'm sure when you hear the oil prices up, the next day you see the petrol pump goes up significantly, even though that oil in that petrol pump is the oil that they bought weeks or months ago. But they put the price up straight away, and that's what's happening with mortgages. So in this video, I'm going to talk about where are the swap rates? What is a swap rate? What does that mean for you? What should you do right now if you're one of the 1.5 million people that are going to be changing their mortgage deal in 2024? So before we jump into that, as always, if you haven't done previously, do subscribe over there and hit the bell notification. Have a look around the video here. You'll see we're a smidge away from 22,000 subscribers. We'll hit that in the next few days. You could be the person that gets us there, so make sure you smash that and smash the like button, tickle the like button, do something to the like button. Be one of the people that doesn't get massively bothered by doing that. It just helps out the channel. It gets us more views, and I really appreciate it when you do it. So be a top person and do that for us right now. So what is going on? Well, inflation data came in relatively hot. It was higher than we were expected. And so the inflation data went from 3.4% down to 3.2%. But the expectation was that it was going to be 3.1%, which is where it needed to be. And the markets pay a lot of attention to the targets and whether we hit them, or if we don't hit them, how badly we miss hitting those targets. And what happens is a bank will borrow money off a bigger bank, one that you've probably never heard of. And so they borrow at a rate that is kind of tied into the Bank of England's rate, but not totally. And that's called a swap rate. That's just the easy way to explain it. Banks, Barclays, HSBC, Nationwide, whoever you borrow money from, they borrow from a bigger bank, right? And so they get a preferential rate, and that's where they make their money. And so what they call that is the swap rate. And the swap rates, because of this inflation data and the uncertainty with Israel and Iran, the fact that they're sending missiles to each other is not good, one, for human life, and also it's not good for the markets and volatility. That Middle East stuff is really going to push up oil prices, I'm sure, short term at least. And so that gives a bit more volatility. What will happen is if the oil price continues to shoot up, you never know, the Bank of England might put their interest rate up. So what is going on with swap rates? Well, swap rates are not looking too great at the moment. And so what will happen is the mortgage rate that you're able to get in the next few weeks is invariably going to go up because of this. So the 2-year swap at the moment has gone from 4.55%. Remember, this is what your bank borrows at, and that's gone up to 4.77% over the last few days. It's like nearly 0.25% up, which is a fair amount, and that's going to be a big jump up. And the people that will get hit hardest with that is buy-to-let investors, because they pay only interest on their monthly repayments. So buy-to-let investors should be wary on this. The 5-year deal is also up, and that was around 3.99%, and that has gone up to 4.23%. So pretty much 0.25% there as well. And banks will pass that on to you guys fairly quickly. And so what you'll see in the next week or so is some of the deals that are there right now will go up. Now, what they could have done though, and some might still have, they might have secured a lump of money, maybe at this 3.9, maybe they've got a few 100 million secured at that rate. And so they might last out a little longer, but at some point when they need some more cash, they'll be getting it at this rate. And that is going to be their margin then charged on top of that, the fees on top of that. And that's the rate that you're going to get. So what should you do? Well, I've been saying this for months now. If you are one of the 1.5 million people, that's 1.5 million people are going to have a new mortgage rate at some point in 2024. That's how many still have got to go. And that's how many people are pretty much left coming off these ultra low rates and going on to these super high rates. And what I would do is I would call your bank or go online into your mortgage area in your bank and fix a rate today. I wouldn't wait till Monday. I would fix a rate today if you've got a deal that expires anytime in the next 6 months. Now, that will then give you the best rate that there is right now. Then if the rates go up next week, next month, or the month after that, you've secured that rate. Now, between now and the time that that rate starts, you can still swap that rate out. So if you secure that rate today and your deal expires next week, then you're locked into that rate. And that's the best rate you could have got anyway, right? But if you fix that rate today, but your new deal doesn't, or your old deal, sorry, doesn't expire for 6 months, 3 months, 4 months, 5 months, whatever, during that period of time, if a better rate comes out, you can swap on to that better rate. You can just call them up or do it on your online portal and move on to that better rate. So that means that you've got now your worst case scenario. That's the rate that they've offered today. That's your worst case scenario. If rates go up, you're not going to have to pay those higher rates. So you've got that comfort. It's a really smart thing to do. And I really suggest that you hit that share button here. I'm sure you know your brother, your sister, your auntie, your uncle, your mum, your dad, someone that's going to have to remortgage this year. Just share that button. You can then share it on WhatsApp, Facebook, email, however you want to do it. Share it with them and let them see this video to understand. Fix the rate now, and then if a better rate comes on, move on to that. But what this shows us is if inflation gives us any little blips along the way, we need to get it down to 2%. That's the target. The Bank of England aren't really budging on that. But if we get more blips on the way, this swap rate could keep changing, right? It could keep changing. Now, we don't know. At some point next month, the inflation might get really close to that 2% target. And in that scenario, these swap rates might drop significantly. And then you'll see some better mortgage deals in the market. That's what you've got to keep an eye on. But it's really important that anytime negative news comes out, that is when you've got to take action, because the rates will go up that you get from the lender fairly quickly. Let me know your thoughts on this. Where do you think mortgage rates are going to end up? It's a real roller coaster at the moment. I know a lot of you get frustrated. 1 week I'm saying rates are up, 1 week I'm saying they're down. That is just the market at the moment. Do comment below, do smash the like button, do share this video, subscribe and hit the bell. Check out some more content on my channel, including this video right here.